Bismillahirrahmanirrahim. For the first part, I will present the financial analysis for QL Resources Berhad. QL Resources is one of Malaysian prominent agro-food companies. The company was established in 1987 and is listed on the main market of Bursa Malaysia under the stock code 7084. QL Resources is also classified as a Sharia-compliant company, and its main business activities include integrated livestock farming, marine product processing, and palm oil related activities. Overall, QL Resources focuses on producing quality food products while expanding its business presence in Malaysia and regional market. Next is the year-to-year analysis from 2020 to 2024. Based on the analysis, QL Resources show overall business growth during the 5 years period. The company's revenue increased over the years, which indicates stronger sales performance. Although profit fluctuates in certain years, it improved again in 2023 and 2024. This shows that the company was able to recover its profitability after facing some changes in business performance. Besides that, total asset increased, which means the company continued to expand its operation. Total equity also generally improved, suggesting a stronger financial base. Overall, QL Resources maintained positive growth despite some fluctuation in profitability.
Moving into structural composition of the financial statement, we examine the common size analysis of QL Resources from 2020 to 2024. First, we observe a distinct shift to short-term liquidity. Current assets expanded significantly from 27.3% of total assets in 2020 to 43.22% by 2024, partly driven by a rising inventory share, which grew from 12.21% to 16.14%. On the capital structure side, the company's financial risk profile notably improved. Total equity strengthened to represent 58.39% of total funding, signaling an increasing reliance on internal capital. Concurrently, long-term debt was aggressively deleveraged, collapsing from 15.99% down to a minimal 1.29%. Finally, cost of sale compressed from 80.57% to 77.03% across the period, which boosted profit margins and allowed final net profit to expand its share of total revenue to 7.12% in 2024.
Revenue index increased from 100 in 2020 to 160 in 2024, reflecting strong sales growth. Number 2, gross profit index rise from 100 to 189, while profit for the year index reached 169.69%, indicating improved profitability. Total asset index increased to 134.69, showing continued business expansion. Total equity index grew to 152.93%, while total liability index increased moderately to 115, reflecting a stronger financial position. Overall, QL Resources Berhad demonstrates stable financial growth and improved performance from 2020 to 2024.
Alright, for the liquidity ratio, this analysis shows the company's ability to pay its short-term obligation. QL Resources current ratio remained above 1.0 from 2020 to 2024. This means the company still has enough current asset to cover current liabilities. However, the current ratio declined from 1.42 in 2021 to 1.31 in 2024, showing that liquidity became slightly weaker. The asset test ratio remained below 1.0, which means QL still depends partly on inventory to meet short-term obligation. The collection period increased 35 days in 2024, meaning the company took slightly longer to collect receivable. Meanwhile, day to sell inventory increased to 64 days, showing slower inventory movement. Overall, QL's liquidity is still acceptable, but the company should improve receivable collection and inventory management. Next, the solvency ratio measure QL Resources' ability to meet its long-term financial obligation. The total debt to equity ratio decreased from 0.94 in 2020 to 0.71 in 2024. This shows that the company became less dependent on debt financing. Long-term debt to equity also declined from 0.43 to 0.15, showing lower reliance on long-term borrowings. The debt ratio decreased from 48.58% in 2020 to 41.61% in 2024, which indicates lower financial risk. In addition, time interest earned increased to 9.57 times in 2024, showing that QL has a stronger ability to pay its finance costs. Overall, QL Resources improved its solvency position and became financially more stable.
Now let's move to the efficiency ratio. Cash turnover increased from 11.02 in 2021 to 17.87 in 2024, showing better cash utilization. Account receivable turnover remains stable, indicating efficient collection of receivable. Inventory turnover declined to 5.57 in 2024, reflecting slower inventory movement. Working capital, fixed asset and total asset turnover improved, showing more efficient use of company resources. Overall, QL Resources Berhad improved its operational efficiency from 2021 to 2024. So that's all for efficiency ratio.
Next, let us evaluate management efficiency in generating returns. Across the 5-year horizon, QL Resources demonstrated a strong upward trajectory in profitability metrics, particularly post-2022. The gross profit margin peaked at 22.97% in 2024, indicating strengthened core production efficiency and robust pricing power. Similarly, the operating profit margin recovered to 10.37% after dropping to a low of 6.96% in 2022, confirming tight oversight over overhead expense. This operational discipline directly enhanced shareholder value as the net profit margin steadily climbed to 7.12%. Consequently, return on investment metric experienced parallel growth. Return on asset expanded to 8.8%, proving heightened efficiency in asset utilization, while return on equity jumped to 15.56% in 2024, signaling an attractive and highly competitive return on invested capital. QL Resources maintained net positive operational cash flow throughout the entire macro cycle, speaking to the structural viability of its business model. While a temporary contraction occurred in 2022, dropping to a baseline low of 473,277, the subsequent recovery was remarkably aggressive. By 2024, operating cash flow surged to a multi-year peak of 843,800. This represents a substantial year-over-year growth rate exceeding 35% compared to 2023, reflecting accelerated working capital turnover and strong real-time revenue conversion. An examination of cash flow from investing activities reveals the company's long-term growth and capital expenditure strategies. Predictably, CFFI remained in a net negative outflow position for all 5 years. In 2020, we see the heaviest capital deployment at negative 413,121, highlighting a period of aggressive infrastructure development. Following this initial push, investing outflow gradually tapered off to a low of negative 207,072 in 2022, reflecting a tactical phase of minimized capital expenditure to preserve liquidity. However, this consolidation phase was brief. By 2024, investing expenditure ramped back up to negative 326,589, pointing directly toward a renewed expansion phase and long-term scaling initiatives. CFFF remained consistently in negative territory across the timeline. This continuous negative financing cash flow means that the firm is returning more capital to its financing ecosystem than it is pulling in. Outflow expanded drastically, accelerating from negative 102,494 in 2020 to a massive peak of negative 515,834 in 2023. This trend correlates heavily with the balance sheet change we observed earlier. This large negative balance represents deliberate aggressive financing actions, primarily the retirement of long-term debt alongside corporate share buybacks or steady dividend distribution programs, while outflow relaxed slightly to negative 468,018 in 2024. This financing segment remains heavily focused on debt reduction. To synthesize our cash flow analysis, we review the net change in cash position, which function as the mathematics net result of the operating, investing, and financing activities. The timeline exhibits significant volatility, displaying sharp shift between heavy cash accumulation and noticeable cash drawdown. The peak liquidity expansion occurred in 2021, yielding a substantial net cash gain of 218,971, while 2023 saw a steep net deficit of negative 128,633. It is vital to note that this deficit was not caused by weak operational performance, but rather by the massive financing cash outflows directed towards debt repayments. Crucially, by 2024, the net cash position successfully rebounded back into positive territory at 49,193, fully propelled by the record-shattering operational performance achieved in the same fiscal year.
Next, I will explain the cash and cash equivalent position. QL Resources cash and equivalents increased from 343.188 million in 2023 to 392.381 million in 2024. This shows an improvement in the company's cash position. The highest cash balance was recorded in 2021 at 480.521 million. However, cash declined in 2022 and 2023, which may indicate higher cash usage during those years. Although the cash position recovered in 2024, it was still below the 2021 level. Therefore, QL Resources should continue to monitor its cash management carefully.
Okay, now prospective analysis. Sales are forecasted to grow steadily, supported by strong gross profit margin. Revenue and profit are expected to increase, reflecting improved business performance. And also, total asset, we are forecasted that total asset are projected to grow, driven by higher current and also non-current asset. Total equity is also expected to be strengthened, indicating a healthier financial position. Overall, QL Resources Berhad forecasted to maintain stable growth and profitability. So, for the conclusion, QL Resources Berhad demonstrates strong and consistent financial performance from 2020 to 2024, supported by continuous growth in revenue, asset, equity, and profitability. The company improving liquidity, solvency, efficiency, and profitability ratio reflect effective financial management and sound operational performance. The financial forecast suggests that QL Resources Berhad is well positioned to maintain stable growth and strengthen its long-term financial performance. Overall, QL Resources Berhad remains a financially resilient company with strong growth potential and solid foundation for future expansion. So that's all from us. Thank you.